A very warm welcome to our viewers to the Outlook Money webinar series. This is a part of the Investor Education and Awareness Initiative of Aditya Birla Sun Life Mutual Fund in association with Outlook Money, the only personal finance magazine in India possible. I am Nidhi Sinha, editor Outlook Money, and today our topic of discussion is money lessons to live a healthy financial life. So before we start discussing the topic, let me first introduce and welcome our panelists to the show. First of all, I would like to welcome Mr. K.S. Rao, who's the head of Investor Education and Distribution Development at Aditya Birla Sun Life AMC. Mr. Rao's top priority is to take financial literacy and investor education to various segments and demographics, and he's been associated with this initiative and the mutual funds industry for more than 2 decades now. We also have with us Mr. Amit Trivedi, who's an author, speaker, blogger, and trainer, and has more than 2 decades of experience in the capital markets in particular, and otherwise all things personal finance. In fact, he has recently penned his book on women, which is called Money Wise Perspectives for Women, and has several other books in his kitty, including Riding the Roller Coaster. So welcome to this webinar series, gentlemen, on the occasion of Teachers' Day. And so our topic is related to the occasion of Teachers' Day and money lessons, of course. So to give you an introduction, our lives are a series of learnings, like we all know. So as kids, we learn to take our first steps along with our parents. As we grow up, we go to schools and colleges where we meet teachers. And even our environment and experiences can be, fabulous teachers when it comes to navigating our lives, whether it is financial or otherwise. So let me give you an example. So market movements have been a lesson in the past few years for a lot of people where, people moved with the ups and downs and took emotional decisions. And then they learned the hard way that, maybe that's not the best strategy. And some of them may have already taken those lessons from earlier crises in the markets, and they fared well during the volatility this time. So at every step, there is a learning, and good teachers, be it anybody or anything, can truly make a lasting impact on individuals. So this Teachers' Day, let us explore with our expert panelists on where and how we can gather financial learnings, and which ones should we keep close to our hearts for a successful navigation of our financial lives. So starting with you, Mr. Rao, according to you, who or what can be the biggest teachers in one's financial life?
Thank you so much, Nidhi. Good morning. Good morning to you, Amit, and everyone who are there in the participating in this webinar. Thanks once again. And it is a happy Teachers' Day. It is always, September 5th is a Teachers' Day we celebrate as a birthday of Dr. S. Radhakrishnan. And for me, always Teachers' Day is very unique and special because I belong to a family of teachers. This is 3 of my previous generations are teachers, and by default, I have also become unknowingly a teacher in the finance field. I keep only jokingly say to the people, and most of my 3 generation teachers were underpaid, and today maybe I'm a little overpaid teacher, and that way we can learn a lot on it. And it's always like, yeah, you put it very rightly. Every experience teaches us, and it's not exactly a physical teacher. We can always get learning from everything. And you put it very rightly. Every market corrections, ups or downs, it can teach us. And though, like Dan Templeton said, this time it is different, and every time it is different, but our learnings will always be there, and that will be an experience. And it's always for people. Normally, if I ask somebody, go and touch, what are the 3 things you need in your life, they always say love, money, and health. And you can go second survey, you can ask what is the most important one, probably they think twice, and they can go for the middle one. Money is the most important. If I have that middle one, the rest of the things may fall in place. And though money is not everything, but without money, nothing is there. I mean, that way, money always teaches many lessons. And it is like, money makes the world go round. And I recall there is a quote from Oscar Wilde, which says, when I was young, I thought money is most important, but when I become old, and money is the only thing important. And we do a lot of programs across the country on ground, and there we ask, when we go to a different parts of the country and we go to Assam to down south, and we ask money speaks which language, and most of them they will say, like, if I go to Assam, they say Assamese, or like, in kind of down south it is a Tamil, or and somebody says, universally Gujarati is the language of the money. And of course, Amit Bhai is there. They know more about the money, but money speaks one language always. That language is, if you save me today, I will save you tomorrow. It is like, आज मुझे बचाओ, मैं कल तुझे बचाऊंगा. And that's way money can teach us. Money can always teach you a lesson that, how you treat, it will respond you back. It is like in the financial literacy, the alphabets for me is not ABC, but it's a DIP. And that big, great teachings we can get when you dip into the financial literacy. That is delayed gratification, I is the impact of inflation, and P is the power of compounding. That way, the greatest teacher in any part of the life is our own mistakes. And for money, it is the same thing. The more mistakes you have committed, probably more messages you would have got. That are the teachings we would have got. Probably I can say, it's a greatest teacher is our own mistakes.
Okay, so the greatest teacher is our own mistakes. Of course, we learn, people say that we learn from our own mistakes. And, most people, in fact, learn from their own mistakes, despite, we all have parents and guardians telling us things. But unless and until we burn our own fingers, have our own experiences, it is very difficult to move forward. So, Mr. Trivedi, I have the same question from you also. So can we do you think, can we place a finger at one towering personality or teacher, whether it's an individual or an experience, who can kind of help us navigate our financial journey?
So, hi Nidhi, this is a brilliant question, and because you asked me to name only one, I would say it is everyone and everything.
No, of course you're free to
Absolutely.
list out more.
Absolutely. No, so that's why I started with a broader answer, everyone and everything. So that's the teacher.
Right.
There's a saying which says empty pockets teach you a lot, or rather empty pocket is the best teacher. But over the years, what I've seen is as the pockets get filled up, then also there is a lot that we can learn from half full pockets, or even wealth also teaches us a lot, which means at every stage of life. And as Rao sir was mentioning, it just reminded me what is the universal language of money? What does money speak? And he said, "You save me today, I'll save you tomorrow." So somewhere in our scriptures, there is a beautiful line which says, "Dharmo rakshati rakshitaha." And I was just thinking, "Artha rakshati rakshitaha." So if you save money, money will save you. And what do we have to save money from? First of all, let's look at money as not something that causes harm, because there is one belief which says money is the root of all evil. But I would say it really is required to live a life of your choice. And if that's the case, every single time you interact with somebody related to money, there is a lesson in it. Now, I may make a lot of mistakes, but when I look at those mistakes and introspect on that, there are lessons to learn. When I look at somebody else making mistakes, when I introspect on that without judging, I have a lot to learn. And without judging means I simply have to see, if I were in that person's place, would I make the same mistake? And how do I avoid myself from that? And that's really where we learn a lot of lessons. So in my experience, if you consider yourself a student, then life is the biggest teacher, and money plays its own role as a fantastic tutor.
Right. So money is a fantastic tutor, like Mr. Trivedi says. That is a big takeaway for our listeners and viewers. And while we are at experiences, how experiences and our environment can be our biggest teachers, including money. So Mr. Rao, do you think this whole COVID experience that we had in the past few years it had many lessons. It, brought families closer to their family members. Earlier people had forgotten their families in the rat race, and they started spending more time with the families. And also there were, I think there were other lessons about your well-being, your health, your savings, your emergency funds, etc. So could you give us an overview of what were the learnings, financial learnings from the COVID experience?
Yeah, thank you so much, Nidhi. I think it's always the 2 years of our life for all of us. It's an experience. It's a great teacher, great learning. I'll just take from where Amit was talking about Ardho Rakshita Rakshita, like it's where you say. Similarly, there is a saying in Upanishads which says Suviniyogat Samruddhi. You anything you get, you utilize it rightly, then that gives a wealth. Even these experiences, if we can learn, and that can create a wealth. One is a wealth of experience. Second is why what not to do the mistakes, because we always call it as a new normal, right? It is a now we are getting back to the old normal, but what is that we learned in that new normal, and how we can look at it is start us like in the March 2020, and that was we would not have realized. I mean, world can change in a week. Just a week before, we were all moving around, and suddenly somebody said, you can't travel and you got to stay back, and there is a COVID around, and that has made us to lockdown, and truly a health crisis. But it is impacted in economic way, very big way. It is an economic disruption for the economies, and it's also a disruption for many of us. And many of them, either they have lost the jobs or there is a pay cuts, and it was really pain. And what is that we can learn is that emergencies can come at any point of the time. All that what you need to do is you need to prepare, and you need to plan, and you need to build your emergency fund. And second is like if somebody is very disciplined for taking care of health, then probably they would have lesser impacted with the COVID, because they're like they are more comfortable, and probably their immune system may be better. Similarly, when you are financially disciplined, your immune system is better to take those shocks, and then you can't take any wrong decisions. And somebody may have a lot of money and it is locked somewhere, and you do not have an emergency fund, then you need to sell those assets at losses. And that was a great learning. Keep aside that emergency fund, which is most important. We tend to ignore. Okay, I have this liquid, I mean, equity fund that I can take, but equity is overnight, it comes down by 60%. Then you have to put it at losses. That emergency fund would have taken off, and you don't need to liquidate your assets. And that's the two lessons. And second, there is an immense thing for every one of us is our ability to adapt to that normal. And there were restrictions on many of the life pleasures. You can't travel, you have no journey, and we have learned your livelihood is much more cheaper, and lifestyles are most costlier. And if I go to a financial planner normally and sit with him or her, and I get an Excel sheet which sometimes mind boggling, ये मेरे से नहीं होता है, इतने पैसे तो मैं जुड़ाऊंगा नहीं, and it's impossible for me. And we understood it's not that you need that much big money. Even a small money, you can live a life of joy, life of pleasure, and you can plan your finances. And this is where that restrictions make it, and it is proved to us the simplistic life is also possible. And then biggest lesson for all of us is health is important, but wealth also needs a careful attention. You can't escape it. You can't escape it. And then what is that we can learn is you need to stay invested for longer. And even during the pandemic, if I have not shaken, then my wealth would have grown much bigger. And if I have shaken, and if I have redeemed, and out of fear, it is going to be lockdown, we don't know what is going to happen, then people have lost money. That's you are in, for example, in BSE Sensex, if I can look at somebody at 26, if he has redeemed everything, and when it is moved to 52 in a 1 year's time, you would have felt your 100,000 rupees as, become 50,000, and your 50,000 would have become 200,000. That's where you lost it. And I think this showed us every time we talk stay invested, and staying in the market is the most important. I think what Outlook Money would have taught us many a years on a month on month, probably that outlook we need to get there, and how we can get there. And the last one is like we all think my retirement at that particular age of time, but there some of us at that point of the time, we had couple of years of a temporary retirement, I can call. And retirement plans needs a flexibility. Your assumptions may or may not be prepared for it. As one of our seminars we discussed earlier, you can't predict, but you need to prepare. And And it's there is last lesson I can say is after 2 years now we smile and we have lost many, but there is one thing. I mean, everything is temporary, whether it's a good or bad, and stay course, stay calm, and stay invested.
Right. So I think the most important lesson is, you can't predict, but you have to be prepared. And that is so true for our financial lives. I mean, you cannot predict uncertainties, but you can definitely put certain things in order, strike a balance between your health and wealth, and look at the simple joys of living instead of just going after these lifestyle desires or wants, I can put it as. So we were also talking about equities. Mr. Rao was talking about equities. So taking from there, Mr. Trivedi, like we've been talking about COVID, what were the particular lessons in the stock market that investors took away during COVID, especially because, we saw the market falling to, all-time lows in a way. And then after that, there was a lot of volatility again. So what are the learnings from there?
Okay, so it's an interesting point, Nidhi, and taking a leaf from what Rao sir was mentioning about these Sensex movement from 25,000 to 50,000 in a year. Now that's one phase, but a phase prior to that was equally, I would say volatile, for want of any better word, because Sensex from the January peak of 42,000 came down to around 25,000. So
Right.
there was roughly a 35% plus drop. So 35% drop in a year, or rather 35% drop, if you to recover that, you need more than 50% upside. Now,
Right.
that's mathematically, I mean, it's just numbers, nothing else. But now look at two perspectives. One, if you were sitting on cash in March 2020 and did not invest, your cash underperformed equity markets by a mile.
Mhm.
But if you were sitting in cash in January 2020, then January 2020 to March 2020, your cash, which was yielding zero, still outperformed equity markets by 35%.
Right.
Now, these are perspectives, and it doesn't prove anything right or wrong. This only proves the nature of two different asset classes. One is equity and second is cash. Cash is not volatile. Equity is highly volatile by nature. But at the same time, even with that volatility, that equity has the potential to outperform the other asset classes over a long period of time. And if that's the case, in the long run, in spite of the short-term ups and downs, we cannot ignore investing in equity. And as Rao sir mentioned, stay invested. I would only add to that line, stay invested, come what may. Stay invested in spite of the ups and downs. But having said that, the short-term volatility also cannot be ignored. So if I have any money required for short-term or immediate term, short-term or medium-term goals, then I should not put that money into equity. Same thing, if the market falls by 40% and I have to pay the fees for my daughter's college, and then at that time I can't go to the college and negotiate that, okay, let the markets recover, then I'll pay. It doesn't work that way. So in such cases, you need to provide for those immediate short and medium term needs through different asset classes like cash or debt. But long term money, you better have reasonably large allocation to equity. Now, whenever I talked about this longer term, a lot of times people have asked this question, what is that long term? And to be very frank, I don't have an answer to that long term. But I would generally put it as a thumb rule, because why don't I have an answer is simply because people are expecting that beyond that long term, there cannot be negative returns. Beyond that long term, equity will always outperform. It doesn't happen that way. My way of putting it about long term is, if your requirement is short or medium term, then be careful taking exposure to equity. If it is long term, then you are improving the probability of coming out winners with equity. I think that's the thinking. That's a lesson that I've learned. Second, So, in March 2020, when there was uncertainty everywhere, stock markets had fallen. We did not know because lockdown was a completely new animal for everybody. I mean, half the world's population was locked out. We were not sure about our own health conditions. We did not even know what could the medical bills be if some tragedy struck. And I've seen many families where uh, over and above the health insurance that they had to end up spending 15 or 20 or 25 lakhs on the treatment because the health insurance was either insufficient or certain things were not covered.
Right.
Now, in such case, uh, equity market is not the place to keep the money for these kind of requirements. So if you want to go out and fight a battle and win the world, I mean, which is what we all want to be when we want to create wealth, then ensure that your fort is strengthened and secured. Rao sir talked a lot about boosting immunity. He talked a lot about taking the vaccine. I think this vaccine, immunity, etc., are related in terms of financial terms. The immunity booster comes in by controlling your expenses. That's a huge immunity booster. Reducing debt is another immunity booster. Vaccines are in the form of your contingency fund, health insurance fund, critical illness fund, life insurance, life insurance product. So these are your immunity boosters and vaccines. Once you have those things, then go out. But when you go out, don't forget to wear your masks and keep washing your hands. Protect the wealth also that you invested in. That means when you invest in equity, don't go out without a mask, wear a mask. And that mask also comes from another M, which is a mutual fund, which is a diversified, well-regulated portfolio. So a large part of your risks are also covered and you get the upside of equity markets.
Right. So it's very important to have your immunity boosters on, have the right vaccinations, wear a mask when it comes to your financial lives and dealing with the markets, of course, like Mr. Trivedi highlighted. And some of the numbers that he was, citing, they are very interesting to hear because you don't realize what you have lost or what you have gained unless you actually come down to it, write it down and realize what it is to lose and what it is to gain also at the same time in the markets. So this also I think stems a lot from lack of awareness and knowledge in general in India. Like there are urban spaces that have become more conscious and aware about these things. But there's also this issue that people might have got aware about the fact that say mutual fund sahi hai or about other investments, but maybe they don't know how to do it right. So what role can financial literacy and investor awareness drives can play, Mr. Rao, in this
Thank you
scenario?
so Thank you so much, Nidhi. And the financial literacy, the word itself makes me to say my heart beats for it. It's always, this is the one area where people need to go deeper. It's not just aware, you need to go deeper. I think our regulator puts it rightly, educated investor is who is an informed investor, and informed investor is a protected investor.
Right.
And all these regulations, financial literacy truly complements the regulation. And it helps everyone to protect themselves and invest rightly. Probably we have seen of late, how people have lost in one of the asset classes huge money and they don't know. And one, it is not regulated, and second, they are not aware of those risks. Earlier, Amit bhai, when he was talking about mask, I was just looking at when M is for the mutual fund. Probably for me, that mask of awareness is you need to aware about what the mutual fund is. Mutual fund sahi hai, but which mutual fund sahi hai? Aapke liye kya sahi hai? That is the most important. Further deeper you need to get. And mask that if I can put it as an acronym, MASK. A is your asset allocation, how your assets are divided. If you put entire money into one asset class and if it is not performing, even if we talk about equity, and equity in some countries have not performed for 2 decades, then then your right asset allocation can make that. And S could be you're staying invested or you're investing with SIP kind, regularly you're investing. And K is that part is the knowledge that you need to upgrade and update, and probably you read Outlook Money month on month, then you get that upgraded. That's where this financial awareness, financial literacy brings. And financial literacy brings that awareness, and financial inclusion gives that access. Probably financial literacy and financial inclusion can go both hand in hand. I was reading somewhere, like, if you give bananas and what is that? Bananas and money to the monkeys, and monkeys prefer bananas. They won't take money because they are not aware. By having money, they can buy more bananas.
That is.
And the awareness is something like that. If you are investing it rightly, you know what is a banana a short term, or what is the money which you can banana, you can given somebody, you can eat for one time, but if you have money, it can be many a times. Similarly, that is an awareness which can give that kind of comfort to the people, and awareness gives a lot deeper. One will go very deeper. I remember way back, there is a Sony TV, there is a show used to happen called Who Wants to Be a Millionaire. And there is a tagline for that show, which says, "Seekna band to jeetna band."
Mhm.
And until the time once you stop learning, then you will not start going to win. And this learning and awareness is going to be an ongoing, and it could be a continuous job. And probably, like, we started this investor education campaign way back in 2013. Our first campaign was much before mutual fund sahi hai. This is a campaign called Janoge Tabi To Manoge.
Right.
And this is a campaign which says is, typically, you need to understand first, then consider next. That is exactly the awareness. That awareness people need to look at. I say awareness is a triple A pillar. It's a, you need to have a triple A fund kind. The first awareness is which can give you the provides the choice to you. What is that available? I mean, what is that I need? Mutual fund sahi hai, but mere liye kya sahi hai? And second part is an advocacy. It's a, and then what choices are given, what is that I can pick it up, and how do I pick it up, and how long I stay, and what kind of risk profile I have. Awareness can go a little deeper. But some of us, we know, we are aware, and we get an advocacy, but we rarely get into the action, because though awareness levels have increased among the people, and when we talk to them recently, we were having some conversations at Amphi committee. And most of the people, they are still not acting because they think it's very difficult, I can't follow, and that initial lethargy will be there. And knowing what to do is fine, but if you are not doing what you know, then it is not taking you anywhere. Awareness to advocacy to the action, that could be the most important part. Of course, financial literacy is it's going to be a primary step, and then you need to go deeper. I mean, then probably I can suggest to the audience, month on month. I mean, if you can look at, I mean, I'm a strong reader of Outlook Money, and it's over a years, and like, for example, last month when I was looking at your simple freedoms, I get a lot of understanding on not just mutual funds. How do I look at my retirement? If I, whichever the age group, you need to get into that kind of awareness, go deeper into it, and then you can upgrade on it. That's where you need to look at, and probably this awareness can also give an understanding, not to listen to the market rumors, not to go by today's newspaper, what's happening. Day before yesterday, when yesterday market corrected in high, the next day it will come back, and there could be a Fed doing. But in spite of it, if you are sticking to your goals, and sometimes we also go by, like, X fund has not performed over a period last 1 year, and the same fund we will shun, and very next year that fund starts performing. You need to look at awareness little more deeper. These performances are temporary, and you need to look how that consistency can come back, and you can look at. And but financial awareness, honestly, apart from helping you to manage your money better, but it gives a sense of accomplishment, and it will also protect one individual from falling prey to the market gimmicks. And awareness and need to get much deeper, and it can be like the way you invest with a discipline. Let this awareness level can go much deeper. At one point of the time, you need to know the basics of the finances. At second point of the time, you need to go deeper how the markets functions. Third point of the time, you can go deeper how each of these assets you are doing it. Then you yourself can, though you have an advisor for yourself, you can become your own advisor at one point of the time.
Thank you, Mr. Rao, for the kind words about Outlook Money, and giving us some insight about how financial literacy and awareness, etc., can really help in navigating your life. But talking about awareness, I think one of the first steps that we take is at home with our parents. So when it comes to those primary financial lessons, I believe that come from home and how your parents manage their finances and what they impart to you. So coming to you, Mr. Trivedi, how do you think parents can manage that aspect and how can it make a difference?
This is a huge responsibility of the parents to ensure that the children have a very strong foundation, uh, and then that foundation would ensure that they would have a comfortable and stress-free financial life. I think that's how I look at it. But how do you ensure that? And for that, let's remember one of the common complaints that most parents have, including me. I mean, I also used to complain that kids don't listen, बच्चे सुनते नहीं है. Again, that complaint is absolutely, bullseye. It is absolutely 100% correct complaint. Kids don't listen, they only observe. And once they observe, they pick up the clues. And then comes the next point. If I don't walk the talk, they would see the gap between the walk and the talk, and they would take the lesson which is more convenient and easy, not the tougher one. So if I want my children to splurge, then I have to simply demonstrate how to splurge. But if I want them to become responsible about money, then I got to be responsible. Now, how do I ensure? So let me just share a few examples, and then I'll go to two more things, how I have experimented with my kids and how my parents taught some of the lessons. So number one is, a lot of times we say that certain things are luxury items and certain things are the needs. However, if you just go deeper into that, something could be luxury for one, but a basic need for someone. So take, for example, I'm wearing this jacket and a tie. For a lot of people, it may be considered as a luxury item, but if I do appearances in public, then this may become my need. So I'll simply look at it that way. So somebody's need and somebody's luxury, it could be the same thing. So when I tell my child that you don't need a costly iPhone, but I go and buy an iPhone, do I put it in perspective as to, for my work, I need this kind of features, the facilities, the stuff that a particular phone offers me, whereas in your case you don't need those things. For every single large ticket purchase that my kids are involved in, we sit down and list out what are they looking for, and not starting with the model that they are looking at. So if my son comes to me and says, Papa, I want this particular phone, I would say, okay, let's sit down together and list out what exactly are you looking for. So if you're looking for a gaming phone, let's explore that. That's okay. But then gaming is your requirement. Then don't ask me that this phone also should have fantastic email features, because you are not in business. You don't use email. I mean, just giving a exaggerated example. So that's one. Number two, you keep engaging them in various discussions. Don't assume, parents, please don't assume that kids are not ready to have that conversation. A lot of times parents feel that when my child grows up, then we will have a discussion about money. Sorry, the day you took your child for shopping, that day the money conversation started. And nobody has ever asked me, what is the right age to take my child to a shopping mall or a shopping center or a shop? Nobody asked that question. But isn't money all about spending, earning, saving, investing, all the things together? And spending is a huge part of that equation. So if that's the case, don't shy away from involving your children. They are smarter than our generation. They understand a lot of things far better. So this is precisely what I keep doing. Both my kids, my daughter is 22 and my son is 16. Both of them know my full financial situation. I've shared my net worth statement, my investment account statements, my bank statements. I keep sharing on a regular basis. And the idea is very simple. Number one, make them comfortable with the subject. In a lot of families, parents don't discuss the subject of money in front of children, and then somehow the children start feeling that it's something you don't really discuss in public. Or discuss in public, this is all about ultimately living your life. So this is number one that I do. Number two, when I have to pay my daughter's college fees, I connect the fees with my annual income. I connect her annual fees with my net worth and put it in that perspective. Okay, so your education has so much impact on my investments, which means I'm investing in your education. You have to ensure that the return on investment is satisfactory, return on that investment. So you put things in perspective and keep teaching them. And then you go back to, let's say if I go back to my parents' generation, a few things that they taught me. You also need to unlearn a few things because they came from a different era, which was an era of scarcity. We were a sandwich generation. Our kids are living in abundance. So some of the lessons need to be modified in line with the time. So my parents would always tell me, "Apni chadar dekh ke paँव फैलाओ." Right? Today's kids would say, "पाँव फैल गए हैं, तो लंबी चादर ले आओ." So there's a generational difference. Now you got to balance between these things. My parent taught me thrift. My parent taught me that money is sacred. So आज भी मैं फेंके हुए पैसे नहीं उठाता, but at the same time मैं पैसे फेंकता भी नहीं, because पैसे for me is Ma Lakshmi. It's goddess. It is sacred for me. That's what my parents taught me. If that's the case, will I ever get a thought of abusing money by spending in a wrong manner? Right. So these are some of the lessons that my parents taught me. If I can comfortably pass on these lessons to my kids, I think I would have done a reasonably good job as a parent. These are my experiences that I've shared. Each parent will have their own experiences, their own lessons, their own stories. But one of the advice that I would give is share those stories with your children. They deserve it.
Right. So it is it is a foundational age for children to learn everything in life, and money should definitely be a part of it, because gone are the days when it was considered evil or immoral to have money. It is very, very important to know how to spend, how to manage, because a lot of your desires, not just your financial goals, even your life goals are they are connected to money in a way, because if you don't have it, it's very difficult to fulfill those. So to have an overall fulfilled life, it is important to know the basics about money. And as parents, I think it is our responsibility to impart that knowledge. And kids being kids, they will always emulate us, like Mr. Trivedi highlighted. So coming to the end of this session on Teachers' Day, so if I may ask, what is the one big financial lesson that you would say will help in one's financial lives? I know it is very difficult to put a finger on just one, but maybe if we can, just for the benefit of our listeners and audience, if we can put one summing up comment, Mr. Rao.
Thanks, Nidhi. I mean, it's you put it rightly. It is very difficult to figure out one and what is that. I mean, because the financial this year you put it about the life goals, and it is a marathon. It's a continuous, and probably like if I go to KBC and working for one KBC to win, it is one day. But this is our for us is a winning KBC of the life. Probably we need to put it one. What is that KBC for financial life is? You need to have a first K is your financial knowledge, and the B is your financial behavior, and the C is your financial conduct. If you can make these three right, then your financial life can be very right. But if I can take the KBC as an anecdote to work on this, in KBC to win, you have like, sometimes if I get stuck there, there will be a 4 options which I get it. It's either it could be a 50-50, or it could be an opinion poll, audience poll, or it could be a phone a friend. And the last one is, phone your, it's called ask the expert. Probably that one thing, if I can sum it up at the end, is ask that expert, because that financial advisor, financial coach, he or she can become your choice architect of your financial life. And that could be one thing I can end up with.
Very, very important. And seek out help when you can't do it yourself. There is no harm in doing that, but get it right is the main point. So, coming to Mr. Trivedi, what would be your financial lesson to our audience?
So I am going to share one big lesson that I've learned over the years in the end. But before that, I'll just take up from where Mr. Rao was mentioning about KBC. And he did mention about 4 different lifelines. But in my experience, when it comes to money matters, and especially when it comes to taking help, as you were also rightly mentioning, that you seek help, then remember those 2 lifelines in KBC: phone a friend and ask the expert. When it comes to financial matters, the first lifeline is often harmful. The second is what you need to look at. Don't phone a friend. When you phone a friend, take opinion, not the answer. When you go to an expert, ask more questions and then take the answers from them. But keep this in mind, because ultimately, when you are going to an expert, you are looking at 2 things. Number one, the skills or ability or knowledge. And the second thing is character or integrity. When we go to a friend, we are assured of the second, the character or integrity. My friend would always look at my own interests first, but we forget the second critical element, which is the expertise or the knowledge or the skills. We need both. If that's the case, when you go to the expert for that, ask the expert, the KBC says you give 3 names, upfront, and out of that, then finally you have to select which one expert you will go to. Do your full due diligence in shortlisting the names of experts that you would go to in times of need. Don't really, consider that every expert is an expert. Different experts would have different expertise. A tax expert may not be an investment expert, and an investment expert may not be able to help you with estate planning. You need a battery of experts, and depending on what bothers you or what is your requirement at that point in time, you go to that respective expert. But do your due diligence in identifying those experts. And one of the primary questions that you need to figure out is, how does this advice fit into my requirements? How does it help in achieving my objectives? So that's really what you need to focus on. And let me come to the lesson, the big lesson that I've learned over roughly 3 decades of working in financial field. I started in finance because at that point in time, I thought I knew a lot about numbers. I was very good at calculations, etc., etc. Over the period, I don't really bother to do a lot of calculations, because eventually those calculations are important and useful, but the primary objective, the core objective, is to live a fulfilling life. All the numbers are useful, and those numbers and the life, somewhere between the two comes money. Money is a means to an end. माँ लक्ष्मी का आशीर्वाद है तो जिंदगी अच्छी मिलेगी. Seek that blessing, take help, but focus on the kind of life that you want to live, focus on the impact that you want to make. And that's my final lesson as far as money is concerned.
Absolutely. So on Teachers' Day, what we can sum it up as is that be curious about your own lives, ask questions, find out more, explore more, all those qualities that teachers would love in students, any kind of teacher, and explore your life, which of course includes your financial life, and make those decisions, seek help, and all of that may take you in the right direction. So thank you so much, gentlemen, for this vibrant conversation, and happy Teachers' Day to our audience. And I hope you had a lot of takeaways from this conversation.
Thank
Good
you so
day to
much.
you all.
Thank you so much.
Thanks a lot.